Hello, everyone. Nice to be back. So I think without belaboring too much, so my name is Ben Weiss. I am the Dubai correspondent for DL News, a newer crypto outlet from the founders of DeFi Llama. And I think kind of to start things off, maybe we'll start with Guy. Kind of everyone can go down and introduce themselves.
Sure thing. Hey, guys. My name's Guy, founder of Ethena Labs. We issued the first synthetic dollar earlier this year. The basic idea came from an article that Arthur Hayes published at the beginning of 2023, where you're essentially taking crypto collateral and then delta hedging that collateral to issue a synthetic dollar on the other side. And yeah, glad to be here. Looking forward to it.
Hi, I'm John Patrick Mulin, CEO and co-founder of Mantra. We built a real-world asset layer 1 blockchain. I was just on the other panel with Ben talking about real estate tokenization, so hopefully we'll more broadly be speaking about some of the other asset classes that we're looking at and what we're bringing on chain.
Hey everyone, Matt Law from Outlier Ventures. We're an early stage investor in across crypto and Web3. We've been going since 2014. We've run a number of real-world asset-focused accelerator programs. So quite a good spread across what's going on in the early stage of the market. I also worked as head of strategy for an early RWA project called Boson Protocol for 2 years. So yeah, glad to be here. Keen to share some insights.
Hey everyone, Kendrick from Republic. We are a digital financial infrastructure firm, and by that I mean we run the only legal and tech stack that can accommodate true retail, non-accredited, compliantly accessing digital securities on a primary basis and secondary trading in the US and cross-Atlantic to mainland Europe, and increasingly in more and more countries. I think we were one of the very first investment that Binance made in 2018, so super proud to be a portco of this incredible ecosystem.
Cool. Well, welcome to everyone on stage. I think my first question, maybe I'll kind of start it off with maybe a polemic, right? So I have heard, there are whispers, it's not whispers, people say this online and social media, that the term RWAs is bad branding.
It is.
Okay,
RWA
John, why is it bad branding?
I mean, think about it in TradFi, right? RWA means risk-weighted asset, and also the idea about real versus fake, like what constitutes that?
It's a philosophical question.
Philosophically, it's messed up. It doesn't hold water with the TradFi guys, so I think we do need a better name. But I'm definitely not going to be the one who comes up with it.
Yeah. Does anyone have any ideas for names on stage? Anyone want to kind of weigh in on the bad branding?
Yeah, I'll say a couple of words. I mean, RWA is in itself a rebranding of kind of security tokens and security token offerings. Everyone remember them from 2018? They were fun. And I think
dot.
But I think they had a fundamental problem, which I think is inherited in the market right now, which is that the technological digitization of something is not necessarily easy, but it's not the hardest thing. The hardest thing is actually getting the distribution and getting the sort of willing buyers and sellers to come together in the market. And so I think the challenge with that is, obviously regulatory, I'm sure we'll come on to that, but I think fundamentally is sort of how do you bring participants into the market? And on one side you have crypto people, like token speculators. They want high liquidity, they want they want high yields and high returns, a big upside, and it's quite difficult to sort of like tell that story as it relates to RWAs. And then on the traditional finance side, you have they're already working in RWA, they're already working real world assets. Everything they're doing is a real world asset. So how is it helpful to call it that? And so I think about the users, think about the value proposition that we're trying to get across, and then go from there.
I actually think RWA is perfectly fine because we started out with some really bad branding known as equity crowdfunding. I wonder if you guys have ever heard of that term.
Why is that bad branding?
It's bad because it's confusing.
Regulation, maybe?
No, it sounds, first of all, it's awkward sounding, and people it's like Kickstarters at Indiegogo. It's just the notion of selling securities to the general public, right? But I think beyond just RWA, I think we're talking about digitized finance here, which is the private markets, completely digitized, accessible to the true retail public. So it's just such a vast, compelling, emerging market. But I myself don't have any issue with RWA.
I mean, Guy, I think you do.
I don't really have an issue with the branding.
But you have something. I feel like you have like maybe an opinion or take, right?
Yeah, I guess Ethena doesn't sort of fall clearly under the RWA category. What we're trying to do is slightly different, but I think obviously touch it in some respects. I think the perspective that we had was slightly different. Was the market's been very focused on bringing these type of assets on chain in the last 2 years, which I think is an important thing to do, and DeFi can't ever get from a pretty immature state in where it was for the last 2 years to something that's a bit bigger without doing something like this. I think the perspective that we had, which was slightly different, was if traditional finance, traditional pools of capital can already access these products in the real world, there is an argument to make that it's actually strictly worse off having it on chain because you're introducing different risks that they don't have just holding it in their brokerage off chain. From our perspective, we wanted to try and do something which was truly crypto native and like unique and empowered by tools that we have within crypto that they could not access themselves. And I think the view here was, can we provide something that we can export out of crypto into that system, which actually brings net new dollars into our system?
And you were saying kind of before about this being a basis trade or kind of tokenizing a basis trade. So what does that actually mean?
Yeah, at a very basic level, and it's a pretty common thing that you've seen through traditional finance before crypto even existed, is you just have a long position of a spot, so that could be gold, oil, and then obviously Bitcoin or ETH, and then you're using a derivative contract, usually a futures or perpetual swap, to basically hedge out that exposure. And what's interesting is that you collect usually a yield, which people call the basis in doing so, and it sort of creates a dollar position out of those two things netting off. But yeah, I think we don't have any like issue or controversy with RWAs. We actually have a product that's coming out within that space. It's just that was the starting point for us, which is thinking about how do we bring net new dollars into crypto, and I'm not entirely convinced that putting a T-bill on chain is sort of the answer to that.
I mean, John, do you think T-bills on chains are good? Or?
Well, I do want to clarify a little bit, right? Like, we are an RWA blockchain.
Yeah.
We are one of the biggest, if not the biggest currently, RWA token. So it's obviously something that is important to the space today, but fundamentally, in order to expand, we believe that it can't just be the people who are currently existing on chain. It needs to be broader. And I just think the idea of tokenization as a concept is much more apropos to describe what we're actually trying to achieve here. We're looking at all different types of products and assets to bring on chain. I think fundamentally you have to think, one, are these things investable in the real world? So real world assets. Are they investable in the real world? Do people actually want to buy them if they weren't in tokenized form? And if that's not even met in the first place, then absolutely no go. Are you actually adding value to the issuer? So in Guy's case, like saying in many instances, it's actually worse for the issuer. So that's obviously the second condition that needs to be met. And then finally, is it better for the end investor? And in many cases, it's probably not. So T-bills, are they the best things on chain? I don't know. It's probably one of the first things that people are going after just because it is something that's already liquid in the traditional capital markets. It's easier. Yeah. It's less regulated than like stocks. Everyone wants to do tokenized stocks, but that's a little bit of an issue for a number of reasons. So some of the things that we're looking at include real estate. Obviously, we just had a panel talking about that. Other types of financial products, which are more about giving access to people who don't currently have access to it, like private credit funds. Retail is not getting a Blackstone private credit fund ever, right?
Yeah. I guess what do you mean for you guys are both kind of more, especially Matt in terms of like investing, like what are you actually interested in? I mean, maybe T-bills on chain are kind of boring, right? And like guys doing something a little bit more interesting in terms of tokenizing basis trades. But like, what is something that you're actually excited about in terms of bringing RWAs on chain?
I mean, the simple, sort of obvious and boring answer is stable coins. But I mean, I think we did quite a lot of work looking in sort of frontier and emerging markets, and I think the sort of the transformation that's driving in terms of financial inclusion and sort of access to dollar economy and things like that for people who don't have access to that normally in Latin America, for instance, is absolutely huge. People getting their salary paid into a crypto wallet, automatically transferred with a MasterCard, managing all that currency risk. That's huge. I think.
But aren't stablecoins kind of saturated? Like when Jeremy Allaire was right before us, he was talking about USDC, and then he was kind of talking about Bridge and all these different companies that are kind of going on in it. It's
that's an interesting point, and I think you sort of, on one hand, you have our industry, which is very, very focused on infrastructure, right? And we sort of have these big sort of like gambles that we make over multiple years and cycles around sort of how can we win and be the source for that. I think there is also the applications game, right, or the sort of user interface and the sort of customer or product side. And I think that in stablecoins, where it is a relatively mature market, let's say, or maturing market, that is the case. I like looking ahead, though. I think thinking about I don't know, composability, programmability, fractionalization, all of these things that are sort of fundamental crypto general purpose technology benefits. I think how they get applied to the whole rest of the world that is not currently on chain, I think is very, very interesting.
I mean, Kendrick, you want
So
to?
I'm looking at this question really in two ways. First, what does it mean to be best or suitable to be on chain? I look at it at promoting adoption of Web3, so just mass adoption, what is most suitable for that? And the second one is, what can most leverage the efficiency, transparency, efficiency of being on chain? And so under that lens, I'll give you an example of what's really amazing. If doable to be on chain, Taylor Swift tomorrow, allowing all of her fans to invest.
So Taylor Swift on chain.
A song revenue sharing, very much real world asset. One of these days, you're gonna have tokenized people on chain.
So Taylor Swift will put a song
the
on
next
chain.
song, the next album, rather than raising it from Sony Music, allowing all of her fans, each investing $20, $30 on a revenue sharing basis. So one, all of a sudden, you're gonna have like hundreds of millions of people caring about what it means to be on chain. And obviously, how the hell do you distribute 50 cents in dividend payments to 100 million people every month, but on chain?
But
we want the Swifties on chain.
What's that?
We want the Swifties on chain.
That's how you actually get mass adoption.
I think IP is a great use case. It's a great use case.
I mean, but I think interestingly though, it's a use case, but like kind of what you're talking about has been done in some ways through NFTs, right? Like people have tried to people have tried to fractionalize ownership of stuff before, and like it's gotten into regulatory trouble.
Ben, I think there's a major distinction when we talk about RWA, and I don't think it's mentioned enough. Aside from the technical stack that clearly has been evolving, there's the legal impossibility. The legal stack, when it comes to real-world asset, is such that only now in 2024 that it is compliantly feasible in a place like the United States to do secondary trading. NFT, all of those things, sure, gray area, but they didn't so squarely land in the area of securities.
Gotcha.
So true revenue sharing, tokenized shares, LLC membership interest, or securities.
Creating the token is not the hard part here, right?
Yeah.
The distribution, doing it compliantly, actually issuing it with a proper legal stack behind it is really the challenge. And I think Republic's done a great job in the United States and potentially in Europe. We're looking at it more from a Middle Eastern perspective here in the UAE with Vara doing an amazing job of being quite forward-thinking and progressive, ADGM as well in Abu Dhabi. So I think a lot of these things are going to be jurisdictionally dependent, and I think for us personally, we do believe that real-world assets are going to take off from the UAE.
Yeah, I mean, Guy, what do you think? I mean, do you think that, have you had any trouble, or what do you think about the regulatory challenges for either your product specifically or just kind of more generally in terms of, I don't know, future additions you want to bring on chain from your company?
Yeah, I think the US has obviously sort of isolated itself from the rest of the world, and I think developers over the last 2 years, and so Ethena took the approach of having no exposure there from like a user perspective, and I think that's going to continue indefinitely unless we see some major changes after the election. I think with RWAs in particular, it's actually one of the most sensitive assets within crypto on this particular topic, just because.
Would it have been sensitive in terms of legally?
Yeah, legally, as in if you're going to be breaking securities laws and broadly offering these things, that becomes a much more of an issue for regulators than most of the other assets that you see in the space. And I think this is one of the struggles that you have to deal with, which is fundamentally, even the example you're using about a T-bill sitting on chain, what's actually useful about that is that you can give it to someone in the developing world who has no access to the financial rails within the US, and they can save their money and earn a small yield on that. That's a fundamentally incredibly useful product for people all over the world, but it doesn't sort of fit within the regulatory framework. And that's sort of the issue, which is that you're talking about a product that we can all sit here and agree is probably a useful thing to provide to people, but we don't really have a framework in which to do it. And so I think the place where this ends up, in particular for RWAs, is you probably need some sort of permission chain on which it's settling, and KYC, AML type infrastructure is actually put in there on the chain level, because I think even if you see the RWA issues that are coming in from TradFi, whether it's a BlackRock or a Franklin Templeton fund and that kind of stuff, you're not able to just buy that in a curve pool or just broadly within DeFi. It needs to be slightly more restrictive and makes the product slightly less accessible, but I think fundamentally that's the only way it's going to work.
I would like to comment on that from a chain perspective. So we're building a permissionless blockchain, but with a permission layer. And the real world assets that will be issued are obviously coming from the permission layer, right? Which has permissioned access via KYC, AML checks, and making sure that anything that's coming on chain has provable, verifiable provenance that is done compliantly with the proper regulatory approvals.
But
so,
do you think that like then kind of the question of where, I mean, maybe this is actually just leading into a no-brainer, but it seems like with RWA adoption and where you're going to see actually product market fit appear is not in the US would be, and kind of Guy was talking about developing countries. I mean, like Matt, you were kind of referencing this as something that you're thinking about in terms of where you're deploying investments or where you're most excited. Like, is that a kind of good approximation?
I think that what we see is, people who don't have as good access to financial services, to banking, that sort of thing, have a clear and present need, right? And what you see from a lot of these it's a bit like the development of the mobile internet, if you like, 15, 20 years ago. A lot of emerging countries actually just completely jumped over having a desktop PC at home and just ended up with a smartphone. And it wouldn't surprise me at all if, you see a lot of people now just using a much more efficient, much less costly system to achieve the same user benefit. I
guess that kind of leads into the next question, or maybe last question, depending on how much time we have left, is that like RWAs have been a narrative that we've been talking about for a while. I mean, like idea of tokenizing something on chain is ever since kind of the world computer idea was launched with Ethereum, et cetera. That's been something that people have been talking about. I mean, do we think is actually having good regulation or having a place where you can do these experiments, is that the thing that will make the narrative actually seem less stale and more like actually, I don't know, feasible? Does anyone have a kind of take on that? Or Kendrick, why don't you go?
I think there are like 4 phases to building anything new. So like you're turning the impossibility into possibility, then to normality, and then into reality, and then into the norm. I think 2018 was like the feasibility of something completely illegal and not even technically feasible and make it possible. And I think now in the past 4, 5, 6 years now, that now is functional, so it's from possible to real. And the next phase forward is to normalize and turn it into mainstream. And that I think that's much of it is a UX and a quality issue, and it's just a function of time.
I agree with that. I mean, I think it's been this convergence of technology, regulatory frameworks, and also mind share, right? I think if you looked even in the beginning of the year, RWA was not really a hot thing or a hot narrative. And fortunately, we have Uncle Larry, Larry Fink, BlackRock CEO, who goes on CNBC and talks about...
Is Uncle Larry now his actual...
I call him Uncle Larry.
Name?
I mean, he's been good to Mantra, he's been good to me, so he's Uncle Larry.
Okay. Thank you, Uncle Larry. Yeah.
Love the man. But it has legitimately come out and given credibility to this idea. And even though he doesn't use the term RWA, he uses tokenization. It has actually allowed institutional players to come out and actually feel confident in speaking about it. And actually, a lot of these people have been working at an institutional level, banks, hedge funds, asset managers, for a long time building up their capabilities internally, but they haven't really been that public with it. Like, institutional adoption of tokenization already has significant product market fit. Where we haven't seen it is at the retail permissionless blockchain level. And I think with Larry Fink talking about it publicly, it's allowed this floodgate to open where actually now we can start building things in public, both at a kind of startup level like Mantra, but also at the institutional level like BlackRock.
I mean, this is a stupid question, but I will ask it. What's like the wackiest thing that you want to be tokenized as a real W asset, or a real world asset?
The wackiest?
I don't know.
I mean, we talked about it on the last panel. I'm like down for Pokemon cards. I like Pokemon cards.
Yeah, you could fractionalize Pokemon cards.
It doesn't mean it's going to be a massive market, but people actually love it.
Yeah, I guess like with the last minute left, I'm curious, beyond Pokemon cards, like, and beyond stablecoins, right? And Guy, you're doing something a bit more beyond just like tokenizing treasuries. Like, what do you guys actually think is the next step or the next kind of use case to come with RWAs and tokenization? Matt, do you want to go?
Yeah, I feel quite strongly about this actually, in that the big innovation, the strong general purpose technology we have in this space is decentralized finance, right? And actually, I think what we need to do is we need to solve for this kind of real world asset oracle problem that exists, right? I tokenize my Lamborghini. Okay, well, I sell you the token. Do you get the Lamborghini, right? And regulations help people in a way because it sort of protects people from that problem. But how can we do that in a more crypto-native way.
Yeah. Well, I guess we need to give everyone tokenized Lamborghinis or something. I don't know what the solution is there. But yeah, that's pretty much it for our panel. Thank you for everyone to listening. And yeah, enjoy the next one. So yeah.
Thanks, everyone.
Thank you, guys.
Thank you.